Hi, everybody. Welcome back to the Next 2020, or welcome if this is your first time. I'm glad you guys are here. Today, we have a really great show for you. We're going to be talking about finance and investments with two great guests who are currently in the field and doing great things. So let's invite Sami and Adeel onto the show. Or Sami and Adeel. Yeah. Hey, guys.
Hi, everyone.
Hey.
Thank you guys for coming on the show. I'm excited you guys are here. Let's get started and introduce yourselves. So if you guys could tell us where you work, what you do there, and what your favorite part of the job is. Sami, let's start with you.
Cool. Hey guys, I'm Sami. I am currently on the strategy team at Intuitive Surgical. And we work on increasing revenue and working for a corporate company that's growing in the healthcare innovation industry. Prior to that, I worked at SunTrust Robinson Humphrey. I was an investment banking analyst for 3 years in the energy sector. And then prior to that, I'm a pretty proud UNC alumni. Can't wait for Carolina basketball to get back on it.
Love it. And Adeel?
Thank you. So I currently work at Mednax Medical Group. Primarily, my role is in mergers and acquisition and involvement in joint ventures. Best part of my job is, being part of the process of facilitating the entire execution of any transaction of practices and doctor groups. Prior to joining Mednax a year ago, I graduated from Florida Atlantic University in Boca Raton, fellow Owl. While there, in my last 2 semesters, I was part of Commerce Partner as an intern, and that's basically my professional career. But I actually was born and raised in Pakistan, so I moved here pretty recently. I would say like less than 10 years ago. But short, yeah.
Short and sweet. I love it. Great job, guys. So welcome again to the show. Now that everyone knows you, now we're all like a cute little family. So let's talk a little bit about your personal careers and how you guys got into it and things like that. So let's start off and talk about what inspired you to pursue a career in finance. Adeel, let's start with you this time.
Yeah, absolutely. So, inspiration-wise, when I was, like most of the business major students in my undergrad, I was really struggling to find what I wanted to do. I had a general idea of what I wanted to stay in the business. But when I first took my corporate finance class and started going through a lot of the concepts and, started really liking looking at the market and just trying to understand, the general concept. And, I was more curious of what it is in the practical world. So I kind of took a long shot and, joined this investors club and part of like business professional fraternity. And there were a few friends who inspired me to, partake in activities and really learn about, what finance is from professionals who are already in the professional world. So, I started this financial analyst program, which is a fellow friend of ours was part of as well. And, that's when I really struck my, I guess, heart and mind for finance. And since then, I'm grateful to be in the industry where, it's not just finance, but it covers every other industry and it can be overseeing any other industry as well.
Mm-hmm. So that's amazing. Great, Sami.
Cool. Yeah. I think my path to finance definitely happened very organically. I didn't grow up being like, oh, I want to become an investment banker, or oh, I want to play with stocks all day, or things like that. It was actually quite the opposite. And so while I was at undergrad, I knew I wanted to do a structured undergraduate business school degree. And I wasn't sure what I wanted to do within business. So I was looking at marketing, entrepreneurship, and then with finance, I took a few corporate finance courses. And the thing I really liked is that it honed on the quantitative skills and used, math and numbers. So it used on the math and numbers, and then we added with the qualitative skills by using, problem solving, critical thinking. And when that was combined, I was really interested in how all that played a role. So I went into the investment banking recruitment. I did a really great internship one summer, and I was like, this is fast paced. day to day data is changing, the market is changing. This is something that I want to start a career in. And that's kind of how I got sucked into the finance hole. And once you're sucked in, you can't come out. So it's been great.
Yeah, I definitely agree.
That's awesome. So you both had very different starting points, which is great. Along your starting point or anywhere, did you guys have a mentor that encouraged you to do it or helped you along the actual finance field? Did you have a relationship that helped you with that?
I can grab this one first. So I guess for me, I feel like I've had a lot of mentors across the way, like through all of the different places I've been in life. And I'm definitely not the kind of person that goes up to someone and says, like, hey, I don't define the mentorship, and I don't think people need to be so kept up about defining a mentor. But just from having close friends and even my family, my teachers, my professors, and my bosses and my careers, I've definitely looked up to a lot of them. And I have mentors that probably don't even know they're my mentor. But I think just the advice is that whenever you're given advice by someone who is higher or has been in your shoes before, definitely take it, and it's invaluable. And then so I feel like I've had a few mentors.
Awesome.
Yeah, I think, my approach to having a mentor is pretty similar to Sami. I didn't really have, a specific mentor that I, texted and asked, like, should I apply to this job or not? But along the way, since undergrad, there have been friends and family members and colleague at, my previous internship that would be, very helpful in terms of being hands-on and then really showing what it is like. And if this is something that they would want you to do, or if this is something that they would personally do or not, from speaking from personal experience. So I would say, it's combination of a lot of friends and colleagues and just people that, speaking at networking events, being part of extracurricular activities and student managed fund, you get to invite a lot of people from the finance industry, including wealth management, investment banking, investment management, and then, seeing what their experience and journey has been like and what they do, what they've done, that really explain, what you want to do. And, in those conversations, there comes an advice that you just kind of grab and just hold on to it and then take it. So I think it's, similar to Sami, it's been a, combination.
Yeah, that's amazing. And what's interesting is you both have been mentors to me in a way. Sami and I went to high school together. We were on the debate team together. So I think a lot of my wanting to go to law school was all because of Sami and helping with the debate rounds. And then Adeel and I went to school together at FAU and the business school and everything. And we worked a lot together on different projects and things like that. So you both were sort of my mentors too. So that's nice that you guys brought that up, that different people along the way can be your mentors as well. So Adeel mentioned a few different paths in finance just now when he talked about wealth management, investment banking, and things like that. So there clearly are a bunch of different paths in finance. Why did you choose a specific path that you guys are in?
Since I brought that up, I can go ahead and, so, when I first was finishing up my internship at Commerce, which is private equity, I realized, staying in the transaction-oriented space where you can actually look at the business, their operation from a financial perspective, from an operational perspective, is really what I was, interested in and I was curious about. And I would, literally spend hours after my internship going home, just trying to do research on the company that I was actually, just doing some small projects for. But that really kind of guided me of what I wanted to do. Along the journey, I did interview at investment management firms, even private wealth management firms. And one of the things is when getting to the final stages, when you're talking to the people, when you get to ask them questions about the firm, the day-to-day operation, it was very obvious to me, inside an intuitive guess, I guess you could say, that I wanted to stay in the transaction-oriented space. And, I was more comfortable with actually getting into the nitty-gritty of a company, looking at the financials, being able to present, create executive summaries and presentation, and then be part of the entire process, even though, it can be brutal, very unpredictable. But it's just, figuring that out as you go along. Sometimes you just say, okay, no, this is not for me. Yes, this is for me. And then, that's how I ended up staying in the M&A space.
Yeah. Nice.
Yeah, cool. So for me, I think in undergrad, what first drove me to investment banking as I was really young and hungry, and investment banking is very fast paced. Things are changing. You put in a lot of hours, but you get a lot of rewarding experience from it. I knew I wanted a lot of experience early on, and I wanted a lot of exposure to, people on all sorts of the level of the company. So in month 3 or 4 as a first year investment banking analyst, I was on calls with the CFOs of, Fortune 500 companies talking about, ways that they can raise equity. And I think that experience is invaluable at such a young age. And then that ties into a really good point of, I kind of grinded it out for 3 years, and then I was able to take that experience, and I just made a career pivot about a month ago. I started at Intuitive Surgical, which is a multi-billion-dollar company that they own the Da Vinci robot, which is essentially a robot that replaces surgeons in surgery. So it's revolutionizing the healthcare industry. It's a company that's growing tremendously. And now I get to use all of the skills I learned in investment banking and get to the point in my career where I can be on the strategy team and really help grow and evolve this company. While we're, at 8 billion value today, we want to be, 20 plus in the next 5 to 10 years. And I think having the experience from investment banking and then going to the corporate role is really valuable. And, I would just mention it's my first month. Last week I was already working on a deck for the board of directors ahead of our earnings presentation. So really finding roles where I can just get in and start from day one and really feel like I'm contributing to the team.
Mm-hmm. That's great. And I had a follow-up question on that, that you were talking about the intensity of investment banking and things like that. So I wanted to talk about that a little bit more, both as a female and as a minority. Like, how do these things play into your decision choice in picking a specific path in finance?
Yeah, well, honestly, for me, it made me want it even more.
That's awesome.
In undergrad, I remember when I was getting more into the finance-oriented classes that weren't required, but were in sub-verticals of just classes you want to learn. There was investments and derivatives class, and I was like, oh, this sounds interesting. And I signed in, and the class was about 35 people, and there were 2 token females. It was me and one other person. And the irony of that story is that the teacher would cold call on 5 people a day to answer questions, and because he had to spread out who he cold calls, it had to be a female once a day. So while everyone else had a 40% chance of getting called, we had like an 85% chance of getting called. But besides that, I think it's really empowering if you use it to your advantage. I mean, you just got to look at it. It's like, look, I'm here against all odds, and I'm going to show why I'm here. I'm going to find my voice. I was very vocal in my first career, which I think is why I was able to kind of go through the ropes and get, an even better career after it. You just want to use it to your advantage. Yeah, I stick out, but I'm going to stick out, and you're going to listen to what I have to say. And it's going to be great. It's going to be valuable. And I think if you use it as a pro instead of a con, you'll really be successful.
That's great advice. Yeah. What about you, Adeel? Do you have anything to add? Or?
Well, just the idea. I mean, I know we're all aware, like, there's not a big portion of women in finance at executive levels, but seeing recently, at least in the space and that I'm working in banking, private equity, any transaction space like Sami, there has been a push that, women are starting to come in from start, at an analyst role and proving that they're, just as equal to be able to get to executive roles. And there hasn't been a big shift towards, on the executive or, partner level, but there has been recent improvement, and I am, very optimistic, and especially, including diversity. There's this, idea of bro culture and finance, be it in specifically, I'm talking about investment banking, that you have to have this kind of attitude to really make it. And, your odds are against you if you're a minority and women.
Mhm.
It's especially tough for you to actually, prove your point. People might not listen to you, but I've seen, colleagues, I've seen VPs and even managing directors that have gone to that level, but it's been a good change that's been necessary for a long time.
Yeah, that's a great. Awesome, guys. And I just want to let the audience know that if you guys have any questions at any point throughout the show, you can just drop it in the comments and we can ask our lovely guests and they can give their insight on it. So speaking of advice on things, what is one piece of valuable advice you've received throughout your career?
I can take that one.
Go for it.
Just on my career, it's okay. Well, there are several different, valuable advice that I can go about. The most important one is really finding what you love to do. And what I currently do isn't, I couldn't define, that I love, but it's, part of the process is learning and enjoying while you're learning. So I guess one thing that I was told is if you can go through, the rough 80 hours a week, 100 hours a week sometimes, while feeling like you're, learning and having fun and enjoying, yes, there will be some times where you just feel like, this is work. But if you step back and take a look at what the bigger picture is and realize if that's really what you want to do, it will really help your work-life balance, which is, very small in investment banking or any transaction space. But I think that's one of the biggest advice that I still continue to live by, and, take it day by day. Some days will be longer than most, but some days will be, shorter than most. So that's one advice that I would say have definitely changed and shaped the way that I actually proceed on a daily basis.
Mm-hmm. That's great.
Yeah. Again, I have great advice I've been given over the years. I think my favorite one, I have to give a shout out to my dad, good old dad. um, but he always, told me, whether it was in college, whether you're working on team projects, or if you're in a career, your company, whatever your group, wherever you are, never be the smartest person in the room. Because if you're the smartest person in the room, you're not growing, you're not learning, you're not gaining any experience and developing your potential. But to caveat on that, you also don't really want to be the dumbest person in the room, right? Because you want to feel confident in the role you're at. You want to feel like, hey, I'm actually providing value to this team. Like, this team needs me. And you want to have that confidence, and you don't want to feel like you don't belong. Because if you feel like you're learning and you're growing, but you're also confident in the work that you're producing, I think that is the formula to set you up for really great success long term in whatever company or career or setting you're in. So,
Yeah, that's great advice.
yeah.
I also just cheered when you said your dad, because back to debate days, every time we were staying late at her house, he'd always come in with a bunch of pizza, and it was just the greatest moment of my life.
Yeah, advice number 2 is never work on an empty stomach. So
that's great. That explains a lot. So moving now a little bit to the industry in general. So we have to talk a little bit about the stocks, because I know that's a huge part of what you guys do and interact with, I guess. So everyone has a different technique in how they invest and what they invest in. What's one important tool when you evaluate a stock and what you use? Sammy, let's start with you if that's okay.
Sure. Yeah. So I think everyone has their own portfolio decision making and like what's best for them, whether you need cash next week, next month, or the next 5 years. I think the best way to go about it in the beginning is really look at a company or a specific equity and be like, what is the skeleton of this company? How do they produce money? And is this infrastructure of this money producing company, is that going to last? Is there a competitive advantage against other companies that sell or produce the same item? And so you really just want to kind of take a step back and think like, do I like this company? Do I think this company has potential? And if you kind of check that box and be like, okay, I can get on board with this company, I think the first metric that I look in terms of like a quantitative metric is you kind of want to check out the PE ratio, which is a price to earnings ratio. And it's basically a number that will tell you how valued or undervalued the stock price is compared to historical earnings. And you can literally Google this on Yahoo Finance or CNBC, just write PE ratio for Starbucks. And, you want to look, this is also a good index to compare to other industries within the S&P 500. And you kind of want, 10 to 20 PE that's comfortable where there's room for growth, but you're also kind of getting value for the stock that it's currently priced at. But yeah, that's probably my number one go-to ratio to start off the decision making.
Mm-hmm.
Yeah. So what I do, typically recently I haven't actually been, going as into the company's profile, company's financials, and most of the trading multiples to look at what, if it's a good investment opportunity or not. But, generally speaking, the tool that I usually use is I look at the entire risk profile. Does the business make sense? Would I, like Sami mentioned, like, will I be comfortable investing in this long term? If that's my outcome, if that's my potential outcome, if I want to keep the investment growing over a long period of time, will I be okay investing a certain amount of money into this company and not looking at it every day? In terms of specific quantitative measure, I do love numbers, so I do a lot of diligence into anything that I invest, be it equity enterprise value to EBITDA. I generally look at what the industry is for that specific stock. For example, any IT stock, I will look at the entire IT industry, IT consulting services industry, and seeing what are the trading multiples for similar companies that are being traded, right? And kind of create a benchmark as to whether if investors are overpricing this stock based on its cash flows or based on any recent news that has happened. Generally, the PE ratio, I was always, when I first started, it's interesting that I was always trading on PE ratio, but there's a lot of some of the stocks that rely on PE ratio has a lot of investor sentiment. So I've kind of stayed away from it and I really looked at, the true cash flow and finding any mismatches in the intrinsic value of the company. And generally, I don't usually go and do any discounted cash flow, but looking at, enterprise value to EBITDA multiples and, realizing if there's a potential for this company to grow over a long period of time, I will invest into it. And also if the business makes sense to me, if the business is attractive, if the business is in a good industry for a long period of time. Those are some of the things that I generally look at a high level.
Yeah. And just for people who don't know, what's an EBITDA?
Oh, so yeah, EBITDA is earnings before interest, depreciation and amortization and taxes. So it's kind of a proxy for cash flow in the industry. It removes some of the accounting principles and some of the capital structure of a company. It kind of presents, what's the business cash flow on an operating basis without accounting for any, depreciation and amortization, which are not really true cash expenses. It's used as a proxy in Wall Street and, general business valuation. But there are other metrics that you can look at. Some companies will have a lot of depreciation and amortization. So that will not be the best metric to use. If it's a new industry, if it's a new company in a highly capital intensive industry, they will have a lower or even negative EBITDA, such as Tesla was having for a long period of time, but that doesn't reflect its profitability. The investors were still valuing the company a lot more, at revenue multiple. So
that's great stuff. I didn't understand a lot of what you said, but it sounded like really great stuff. No, I was just joking. I understood. But so That's great advice. I think that definitely helps a lot of people starting off and looking to get into the stock market. So thank you guys. And now looking at the pandemic and how that affected the stock market, what do you think the current state of the stock market is? Is there anything that we should keep our eye on? Is there anything that we should stay away from? Sami, why don't we start with you?
Okay. Well, I think if we've learned anything from the last few months, whether you have money invested in the market or if you've just been watching news headlines, that the market goes up and then it goes down and it's a roller coaster ride. So that's called volatility. And the market is super volatile, especially for big events such as a worldwide pandemic. Um, and so as you saw, kind of market was steady, all-time highs, and then once we hit March, April is when we took that big dip. And then, kind of going back up high. And now that we have a fear of a coronavirus round two, we're starting to get back into lows. And I think in order to try to predict, I mean, you can't really predict the market, but to have a better understanding of its upflows and its downflows, there's so many other metrics you should think about. So, let's look at housing rates have been down. Let's look at unemployment rate is at an all-time high. We can look at consumer retail rates. How every month we get a number of how much people are spending on supplies. And I think when you look at all the metrics combined, it paints a better picture of what you can see moving forward. But I would just say hold tight. Even when it's on its lows of its lows, the market historically will always gain at the end of the day. And if you're not familiar with trading, don't make your first trade on a low and thinking you can outsmart the market, because the market will outsmart you. And I see that from prior experience. So you are not smarter than the market. But you could definitely do more research into all of the different components that triggers kind of ups and downs, and then make purchases on industries you think are booming, like technology, or work at home virtual equipment, compared to maybe your brick and mortar stores and things like that. So.
Yeah, that's great.
Yeah, my perspective on the market right now would be pretty similar. There's recently, due to the pandemic, we've seen a lot of big corporations to mid-sized, middle market public companies going bust and not being able to maintain a healthy balance sheet just to stay afloat in the industry. But during the pandemic, I would definitely say do not try to beat the market or time when the market might go up. Speaking from personal experience, you can never time the market. So if you want to invest in a specific stock that you think will go up or down, and you want to place a trade based on that, I'm personally risk averse, so I wouldn't do that, especially in a time like this. But one advice that I would give is, look at the macroeconomic view of the entire industry. What's the Fed's balance sheet? How are the industry being impacted? What's our GDP? How is the economy still, pretty strong relative to other economies, despite unemployment at all-time high? There's been a lot of cash being printed by Federal Reserve. Does that have any impact going into the banks? And how is that being transported to companies and to Fortune 500 or S&P 500 companies? And look to see if there's potential for you for an investment opportunity. But definitely, this is a tough time for anyone to invest personally in trading, but you can be more diligent on the macroeconomic trends and see what the general state of the economy is, and maybe place your bets or place your trades based on that.
Yeah, that's great advice. And not to have any insider trading or anything, but what's one industry you think is benefiting from the pandemic? Not saying for everyone to invest, but in general.
I'll grab this one. My new favorite list. This has been a new favorite industry or company specific. Is that for all you loyal gym people? I I think the best solution for you're too afraid to go to the gym is having the gym in your house. And I'm a huge Peloton fan, right? So if you think of their business model, it's pretty ingenious, right? So you're afraid to go outside, you're afraid to go to gyms, but people still want to maintain a healthy lifestyle. So you purchase a pretty expensive bike up front so you can ticket that revenue in there. But then wait, you are going to get a lifetime collection of $39.99 a month in order to get the content on the Peloton. And you can't use the Peloton without having the Peloton classes. And so I think it's a pretty great business model where not only do they book you for the initial event, but they're booking you every month as you continue into the lifespan of having a Peloton. So that's something. I mean, you can also look at the equity itself has really popped during coronavirus. I can't tell you how many times I like check Instagram and my friend has a Peloton bike in her room. So I think something like that, I've really taken an interest in their business model, and it's pretty great.
That's interesting. I've never thought about that. That's great.
Something right now that I've been recently looking at, definitely no insider trading. I work at Mednex, but I won't promote their stock or anything, just to avoid any liability or any breach of NDAs. But I would say there's been a lot of shift and a big transform towards home learning. And there have been companies in the past and even currently publicly traded companies that provide solutions and provide platforms for kids from K to 12 to learn. And a lot of schools are actually starting to use them as their platform. So, in a time like this, their revenue is starting to increase. And as we go along, more hybrid learning will become normal, not just, in pandemic, but even afterwards. Zoom calls, of course, Zoom, which is owned by Amazon, which is big stock, but any stock that's, specifically, technology related and specifically communications and technology related is of my interest. And I'm keeping my eye on it and still doing diligence. And I haven't really invested a lot recently, but just an advice to anyone watching right now.
That's good. Yeah, I think that's very true. Like all these things have gotten, even just like not even looking at the stock market, but just looking at the goods themselves, they all have gotten more expensive because everyone needs them. Like if you were to go out and buy a mic right now, like the mic is more expensive than it was December, you know what I mean? So great advice relating it to the stock market. So tell me something that you guys have learned about the finance industry because of the pandemic or during the pandemic.
I can go first on this one.
Yeah, go for it.
Because of pandemic, I think I brought this up recently that there have been companies that have faced downsizing, a lot of bankruptcies recently, and in the finance industry, there is this small group of restructuring when a company files for bankruptcy, and they that specific group is currently probably the most busy given the state of the economy, the company's failing, busting, and trying to stay afloat. It's interesting that not only finance, the industry of finance itself is still very hot right now, despite other underlying industries either going bust or still trying to stay afloat, because of the economic situation that we're currently in. Mm-hmm. So what I would say is, finance is an industry that oversees every other industry, looking at being a business or financials or, how they want to make the industry grow. But due to pandemic, there has been a lot of deal flow, not just on the M&A side, but a lot of restructuring. I'm sure, legal industry has also been busy because of the pandemic, in addition to the healthcare industry, which personally experiences as well.
Mm-hmm.
Yeah, so this is a pretty loaded question for me because I essentially got hired during a pandemic.
That's true.
Yeah. So I started working at home in banking in March, and then in May, I started transitioning to my new job for a corporate company, a public company called Intuitive. And well, I think first off, just looking at the soundness of my new company, Intuitive, to me, it spoke volumes that if they're doing the opposite of what most companies are doing, and they're actually hiring and increasing headcount, that seems pretty promising during a pandemic that they can still recover. So that was really attractive to me at first glance when the company was of interest in mine. But now that I'm within a public company, it's so different from how we view the pandemic versus going in banking. Because in banking, we had a lot of deals get pushed out. We had a lot of debt raisings or investors be like, you know what, we're gonna take 2020 off. We'll come back in 2021 and reevaluate. And a lot of things were delaying. And there was a lot of restructuring and bankruptcies, and it was all kind of negative. And then I get to this new company. Granted, I've been here for 3.5 weeks, but it's much more positive of like, okay, so yes, the pandemic is a thing. Yes, our revenue is getting cut because we're not doing as much procedures in hospitals because, there's people who have COVID and there's hospital beds, reserved for the COVID patients. But it's like, how do we move forward from this? Like, what is our game plan to ramp up? Because at the end of the day, in the healthcare industry, you're going to need your colon surgery at some point. Like, you can put it on hold for 6 months, but probably shouldn't put it on hold for 6 years. And so we're looking right now in the strategy team, looking at different areas where we can cut costs, but we can also maintain that revenue stream and, almost kind of mimic that Peloton model of like, hey, if we give a hospital a robot, that's fine. But like, how about we have certain instruments that we use that you have to get a new instrument every time? So we actually adapted to like in looking at new structures and how we structure our business internally so that we can stay ahead of the pandemic instead of taking 2020 off and then readjusting in 2021. So it's been interesting to see kind of both views from the banking side of it and the healthy public company side.
Yeah, that's really stark difference. That's very interesting.
Mhm.
How do you think like these different, I mean, we'll talk about banking just because you brought it up, but like other industries like that, how do you think they're going to bounce back after the pandemic finance wise, like finance?
I don't think there's going to be a problem of a lot of companies and banks bouncing back. I think as long as you can kind of maintain and stay afloat is kind of like the term I've been hearing during this time. Business will resume. People will resume. People will go outside, whether that's till we get a vaccine or whether that's, we feel more comfortable 2021, 2022, whatever the time frame is. Um, People will get back into life. It's just a new way of life. So it's figuring out ways to adapt, and especially in banking, being kind of strategic of like, hey, okay, the market's pretty low right now. It's not doing well, but interest rates are pretty low. Maybe I could do a high yield bond and market that because yeah, you got to put some money into refinancing, but you can get a pretty low interest rate. So it's kind of like trying whatever line of business, whether it's banking or a company or a small, mom and pop shop, it's trying to find a strategy to get your way around the pandemic instead of blaming the pandemic for all of the terrible things happening. Let's kind of look forward and see what kind of implementation we can do to kind of keep the business afloat so that we can get to that place where everything gets back to normal.
Yeah. Wow. That's great.
Yeah, speaking on that, I mean, I would say in healthcare generally, when the pandemic started, everyone, even in the street, even, the investor sentiment has been that healthcare industry would likely to, experience big uptake in revenue. But personally speaking, a lot of the radiology, a lot of the specialty where my company MedNext provides services stopped as much as 50% of revenue on a monthly basis because of hospitals shifting their focus more on COVID patients than using any other specialty or even surgery procedures. So it's kind of weird to look at an industry that is the core focus of the pandemic right now and still seeing how a company is not able to generate revenue. There's losses to the company that due to that they have to put people on furlough, have to kind of lay off departments. So it's interesting, but coming back, it's I've seen that there has been a positive improvement towards, physician services, seeing a lot of technology is being implemented to provide telehealth consults, even though patients or women are not able to go to the doctor's offices for consultation when they're sick with, their babies, but a doctor can still get on the phone and then provide them consultation, and they're still able to bill, and companies still able to generate revenue. So it's kind of, creating this creative aspect and creative technologies for you to provide services and continue to make sure your business run, because at the end of the day, healthcare is a service which will be needed. Granted, Intuitive or Sami might have to implement their robots over physician later in the future, but for right now, we've seen in the past couple months, physicians are starting to take a lot more appointments, and seeing people on their iPad, on their laptop, and still continuing to grow as well.
Yeah, that's really interesting, because I mean, I didn't personally think of the healthcare industry for allowing a lot of people, but that you made a great point. I didn't think of that beforehand. Wow.
Yeah, I was shocked too. I'm sorry.
Yeah.
I was shocked too when I was actually looking at the numbers. You start realizing, oh wow. So what if someone really needs a surgery? What if, this mom really needs to get taken care of? The hospital are not allowing anyone other than that. They're really canceling all those procedures. So what do you do in this, scenario? So it's kind of a life and death scenario where physicians can't provide services because they're saving space for COVID and severe COVID patients.
Mm-hmm.
But it's definitely an interesting aspect of this pandemic.
Yeah, that's crazy. Wow. We covered a lot just now. Switching over a little bit and talking about foreign countries and trade negotiations. I mean, we've seen a lot of things happening because of the pandemic with international trade, and we've also are seeing just things with like NAFTA going, like the new NAFTA coming, and China, and all these different trade deals going on. How do you think these negotiations have affected the U.S.'s financial industry?
Yeah, I'll start with that one. I think, it's really important to keep in mind that like we are a global economy at the end of the day. And like, yes, we are states within countries, within continent that makes up regions. But I really think, we are interconnected globally, whether we like it or not. And, something that you had mentioned and I keep seeing on like the headlines is, China doesn't like us, China likes us, China doesn't like us. And it has a pretty big effect on the market, because on the days China does like us, the market's good because investors can like take a breath. But when China doesn't like us, the market goes down. And I think it's safe to say it's beneficial for the United States and China to get along. It doesn't help either economy for conflict. Not to go anywhere political with this conversation, but I think taking a step back and looking the world as a global economy, and we have supply and demand, and we have exports and we have imports. It really does take a toll internationally what happens within the borders of the United States. I mean, a lot of these small islands, I keep hearing about the tourism industry. United States is a big, send people to tourist islands, and they're not making money, and they're going to have to ask their government for money, and their government's going to roll up to the United Nations for money, and the United Nations going to impact everybody. So I think it would definitely be close-minded if all we did was look at the United States issues and politics and economic, all those ordeals, but really take a step back and think about, what are the bigger issues and how do we get this global economy and defeat this pandemic as a global nation, not just a United States nation.
Mm-hmm. Definitely.
Yeah, I think, she hit right on point that, as time has passed in the, past few decades, as information is more transparent, media has become more vocal, and people are able to look at information online, be it on TV. We can, really see how connected this world is. All the economies might, operate separately. They might have their own, federal banks and their entire economic teams. But at the end of the day, the market still depends on the idea of globalized economy and globalized world. Sometimes, there will be a news coming out of U.S. and China trade talk that will really shock the investor, even though if it's positive, news, and you look at Dow Jones and you look at S&P and you look at the numbers, it's 5% down. It doesn't make sense, and no one can really tell you what happened, but it's the investor expectations. They were expecting trade negotiations to continue to get worse, but didn't, and that's why the market came down. But at the end of the day, stock market is just one aspect. For us to actually work as a global society, we need to have these trade agreements. So countries with a lot of good resources, a lot of rich resources can provide and capitalize as well at the same time to developing nations so they can help their economies grow. And it's been difficult when it comes to negotiations because there's a lot of political fire involved in it. But I think in the near future we've been making the right steps to help resolve these trade disputes, and it has affected the global economy as a whole, be it just the stock market or the actual GDPs of developing countries that are actually relying on all these peace negotiation agreements to actually get a lot of imports into their countries and be able to eat. So
yeah, I think you both made great points as usual, but we do all need to work together and be able to do that. That's great stuff. So as we're beginning to wind down, I kind of want to go back and talk about you guys a little bit, just in case anyone watching wants to one day go into the finance industry. I want to ask you guys what your biggest challenge was in your career and how you overcame it. Because I think that's so important, not to be focused so much on the challenge, but how you overcame it. So that's my question to you guys. Sammy, why don't we start with you?
Okay.
Sorry.
I think one of the biggest challenges, and I think I learned on this a little bit earlier as well, is that when I went into banking, my first career out of undergrad, I got cut off from all my parents' bank accounts. I got, in Atlanta, and I have this new job that's really intense, and I'm so overwhelmed, and all these things are going through my head, and I don't want to mess up. I was really nervous when I started my career, and I didn't speak up when I should have in multiple times. There's a lot of board meetings with a lot of higher up people that had titles and a lot more zeros in their paycheck than I did. And I didn't feel like my comments brought value to the table. And so I just wouldn't say them for months. And, I just wish back then I was, a little more confident. And I guess the game changer for me was this is so embarrassing, but one night I just had it, and I had a really stern talk in the shower to myself, and I was like, Nicole Kerker, you didn't get to the position where you are because of luck. You are smart, you deserve to be here, even though you feel like you stick out, you add value to the group. And once I kind of gained that confidence, I was able to go back into boardrooms or even just one-on-ones with my managers and bosses and say hey, this number doesn't feel right. This valuation seems a bit high or a bit low because of X, Y, and Z. And, sometimes they would enjoy the value and be like, oh, let's take a second look. Sometimes I just was like, yeah, okay, here's another argument that goes against mine. But I felt like I was getting more out of my career when I had that confidence to speak up, and I was able to grow at a faster rate than just sitting and taking notes and being told what to say and what to do. So I think really finding your voice and then overcoming that confidence level is key to kind of success in a long-term career in finance.
That's great. Yeah.
So, my challenges, I would, present twofold. One would be actually getting to where I wanted to. There's this, favoritism in this industry, which is real. Anyone getting into the industry needs to know that you have to be aware of the challenges and how you need to differentiate yourself, because if you're trying to, specifically get into investment banking or private equity, the chances of you actually getting in is very slim if you come from a non-target, or which is, any lower school. If you're not in the top 10 business school, the chances of you getting into, bulge bracket or a large bank or even a middle market bank, is very slim. And it's not because the industry has just a favoritism towards that. There's been an idea in the industry where, if you go to a good school that you can prove that you can get in and you can do the hard work, and finance isn't as complicated for you to transfer your skill from chemical engineering to even art. So, we can train you. But the reality is there are people who go into finance, such as myself. I went to Florida Atlantic University, which is very down south. And a lot of the banks and private equity, is based in New York, Chicago, San Francisco. They just don't travel down for recruitment. And, even the recruitment itself starts 2 years prior to you graduating. So I think that was one of the biggest challenges, not knowing the timeline and when I, should be able to get in. And the school that I went to had tremendous opportunities for me, allowing me to go to, private equity for internship. And that's how I was able to differentiate myself and get into, transaction oriented space. I did try into banking, but I wasn't able to because of the late cycle, but I was still able to get a pretty similar role at a corporation. The second, point, which is very similar to Sami, is when you're, let's say starting out as an analyst at a young, company, which is very much a corporation with structured communication, it's hard for you to get your message across. You find a lot of inefficiencies within the company, and when you point those out, it's, you want to make sure the company that you work for is, run efficiently, if not, if not the best. So, starting out, it was really hard for me to voice my opinion because I wasn't getting heard. I was just, doing work, people were listening. And there will be times when I had more, finance background than some of the directors, and they were more specifically in healthcare. So there would be times where I would, actually just call out something in the meeting and would get in trouble for saying it. So, which is never appreciated if a junior analyst who's just starting actually calls you out on something you did or something you told them to do. But having the confidence that, telling, okay, this is wrong, this is what should be done, is, a hard thing to do, but, you just have to do it. And recently, I've been confident enough to actually call out on any meeting. And at the end of the day, what matters is if you're right or wrong. If you're completely right, you should definitely be confident and have, backup data points and backup to your argument, and then prove yourself right. And the right people, be it at CEO level, CFO level, will, really see your value when they actually see your point and the way that you make your argument.
Mm-hmm. That's great advice. And it's interesting that you both have similar challenges that you had to overcome in different fields, different spheres. That's crazy, but really great advice that you guys gave out. And now just on I guess your not personal level, I mean, if you want to as well, but what are some of your 3-year goals and what are you doing to develop them today?
I can start off if you like.
Yeah.
So 3-year goals, definitely not staying where I am. Hopefully no one's watching, but it's not because, I had a conversation with a few of my finance friends before getting into my professional career. And one of the conversation point was, is corporate what you want to do? And at that point I was, really confident that I wanted to be an entrepreneur. I wanted to do my, own thing. I wanted to create a business, but for me to really understand how a business is run, I think, a corporate experience would be really good to see where it's right and where it's not right. Mm-hmm. And that I think holds true today. And hopefully, recently me and a couple of my friends from college were working on some startup ideas, and due to pandemic and extreme busy schedule, we had to kind of just push those projects to the side. But hopefully we can get back into those, internet platform for home services. There's a lot of ideas, but hopefully we can, get back and work on our startup again.
Yeah, that's awesome. What about you, Sami? I know you just started a new job, but
yeah. Well, in 3 years, to some viewers out there, I hope I'm engaged in 3 years.
Oh, hint!
A certain somebody, but other than that, No, career wise, I did just start at this job, and this is kind of a dream company for me to grow. So I definitely see myself in the next 3 years staying at this company, understanding the ins and outs of the business and making the right connections and networks to grow internally. I would love, kind of farther out in 10, 15 years, have a management role and kind of get up to the executive suite would kind of be the end game.
Yeah.
And I think just really finding a company that you truly align with the vision, and then it's also a sound company with room to grow. I think that's just kind of for me checked all the boxes with with a great culture, with all the people being super cool and friendly. I think this is something I want to stick with and watch and help the company grow, 5, 10, 20 years. So check
Mhm.
back in 10 years. So we'll see.
We will check back in. That's great stuff, guys. So one of the main points of my show is just to try to connect young professionals and try to inspire more people to go out and do what they're doing. So to do that, I always ask the guests to provide their contact information or a way that someone can reach out to you if they really struck a point with you and really want to know more about this one specific thing, because we covered a lot, but we didn't cover it all. So if you guys want to provide a way that the viewers can contact you, please do so now.
Yeah, I think I sent in your LinkedIn. So hopefully the LinkedIn banner will pop up shortly. But yes, I have been through banking recruitment. I've been through the switch of going from investment banking to corporate. Like I've been through, I don't know, maybe 50 interviews, and they've all been super technical. Like if you just have any questions of how to break into the industry, if you're interested in banking or interested in a corporate or just want to chat, like feel free to LinkedIn me. Again, name's Samantha Kerker. You can message me and we can definitely find a time. Happy to chat.
Awesome.
Yeah, I provided my LinkedIn as well, but I prefer if you would want to email me, I'll also provide my email as well. But if you message me on LinkedIn, mostly responsive and getting back. One of the big thing is, I want to share my experience with anyone who's, wanting to get into the industry, wants to just learn what, in the practical life is, and, how it's different from, what's being shown in the textbook. Like Sami, I've been through a lot of interviews. I've definitely screwed up a lot of interviews, technical. I've nailed a lot of interviews as well, but still never gotten, the cultural fit, which is, I'd be more than happy to provide, insight into as well, in any way and form of shape. If, anyone is looking to get into the industry, I'd be, glad if I can be of help.
Awesome. Well, thank you both so much for being on the show and for covering all of these kind of tough topics, but important topics that we covered. You guys are great, and I hope the viewers enjoyed it. And like you said, now the viewers have their contact information, so if you have any specific question or need anything, definitely reach out. And we hope to see you guys again next week. The viewers, not the guests, because we'll have new guests. But thanks so much for watching today's show.
Thanks, Gab.
Thank you. Thank you for having me.
Of course.